It's about that time of day again. My name is Joseph. Monday evening, January the 8th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is range-bound and trading at the high of a range. So my plan is to look for selling opportunities using the 2-try rule for failures going back down into that range tomorrow morning. The S&P is bullish with a big spike in range pattern to finish today's session. That's telling me to wait for buying opportunities below the moving average, and I'm watching for traps and seller failures tomorrow morning. Speaking of tomorrow morning, Nasdaq bullish going into Tuesday's session, but ending the day with a short-term trading range tells us to focus on traps and seller failures down at lower lows tomorrow. Gold is range-bound with a big triangle pattern after finishing up last Friday's non-farm payroll report. So my plan is to focus on failures. I'll be using that 2-try rule to fade the edges on gold tomorrow morning. And of course, wrapping up tonight on the euro, euro is bearish with a spike in channel pattern, but with two major support levels just below us, my plan is to wait for selling opportunities after a bullish correction tomorrow morning. We're back after a weekend, get a bunch of big opportunities setting up for this week, get a great newsletter in store for you guys, and a plethora of reliable trading opportunities setting up for Tuesday's session. Before I jump in though, I do want to remind you guys, head to our YouTube channel, make sure you subscribe to our YouTube channel, click that bell icon below the video so you always get notified every time I post a new video. And if you really want to stay in tune with what's going on here at School of Trade, head over to sidewaysmarkets.com and make sure you join our mailing list. Upper left-hand corner here at Sideways Markets, I'll put the link in the description of that YouTube video. Make sure you join our mailing list. I'll send you an email every evening when our nightly newsletter goes live. That way you're always on top of everything new here at SOT. While you're here though, don't forget, follow me on social media, lower left-hand corner, Stock Twitch, Twitter, Facebook, LinkedIn. I'm always posting exclusive content on social media each week, charts, links, and updates that you won't see anywhere else. Speaking of those charts, please don't forget to grab those charts, have them ready for tomorrow. How easy is that? All the charts from tonight's video, you can have them ready on your computer tomorrow morning. Just follow that link below the video over at sidewaysmarkets.com. And then upper right-hand corner, speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room this week or next, whenever you get some free time, right, and see what all the commotion is about. Any questions? Hit me up on live support if you have any questions on the way, on the right-hand side of our blog at Sideways Markets and the right-hand side of our homepage at schooloftrade.com. We got a lot to cover here for tomorrow's session. Tomorrow is Tuesday, January the 9th. Let's take a look at what we have on the schedule for tomorrow, and then, of course, we'll jump into some charts, so stay tuned for more. Now, as you can see here, no major news in the overnight session, nothing from China in the overnight Asian market, so nothing to worry about there. As we go into tomorrow's session, we got some minor stuff, minor, lots of minor news reports. We really don't get anything worth talking about tomorrow until about 10 a.m. Eastern time, where we got our gal Janet Yellen's favorite news report, that job openings, layoffs, and transfer survey known as the JOLTS report. So it looks like tomorrow the meat and potatoes are going to be midway through that U.S. morning session. So stay patient if things are slow. And of course, definitely don't forget, we'll be in our trade room tomorrow morning, 8 o'clock Eastern time. I hope to see you there, along with all of our other advanced members. So no major news in the overnight, no major news really until tomorrow morning as we get into the U.S. session. And that means, of course, we are wide open here if you trade in the overnight Asia right into London session. Let's bust open some charts here tonight and get ready for tomorrow's session. Starting off tonight with crude oil, we'll go crude oil over to S&P, then Nasdaq, then gold, and of course we'll wrap up on that mighty euro. Starting off tonight on crude oil, crude is bullish and retesting the high of today's trading range as it tries to complete rotation up to a possible bull channel tomorrow morning. The channel is a nice possibility, but the only thing we really know for certain at this point is the range that we spent most of the day trading inside today. And we're currently, sitting at those highs. With this information now, my plan is to look for selling opportunities at the high of a trading range, and my specific plan is to look for that 2-try rule up above the high of that range while staying open-minded to the possibility that this market may keep going. It may finish off that channel right up to that prior week high at 62.21, and then we can put the plan together from there. So as I mentioned earlier, there are a couple things you want to keep in mind here. First of all is this trading range that we pretty much spent the entire day in today. You could really draw the range a little bit smaller, right? Up, down, up, down, or up, down, right? So we spent most of our day today, right, kind of inside of that trading range, which was conveniently, right, about the middle, right, of Friday's trading range overall, right? So it was a relatively narrow range day overall. Still found some great tradable opportunities, but still, right, we're inside that range here. So that's why I call it a range-bound environment. That's really all we know for certain right now. Got a flat moving average, right? Very, very balanced market overall, even though the majority of the morning was spent going lower here on oil, and then the afternoon has been, of course, bullish, right? It's basically just a multi-directional trend that trades like a trading range. Now, second component, if you take these lows, right, combine off these lows, copy and paste up to the high, this looks like a decent channel, right? It looks like a decent channel. And if we do make it to the top of that channel, then we want to start looking for that buying opportunity back down, right, at that low. The second thing, third thing, I'm not a math major over here, am I? Third thing, right, buyers are undoubtedly trying to revisit, right, it's not Friday, it's last Thursday's high, right? We had that big run up, the buyers tried to retest the high, they couldn't, so what do? They reload the guns, right, and they're going to give it another shot going higher here. So we have to assume the buyers all have one thing in common, right? They're all trying to get to that 62.21. The fourth component is going to be this measured move, right? You see these levels, right, one leg up to two legs. So the measured move and that prior week high at 62.21 really come together nicely to give the bulls a nice target. And when you overlay the possibility of this channel, right, we can definitely see what those buyers are likely hunting for. So why not be a buyer then? Well, again, because we spent most of the day today trading inside of a range, flat moving average. There wasn't a lot of peppiness to this market going up, right, until recently in this afternoon, evening session. So the plan is to trade this like a range. And of course, anytime we see a trading range, I focus on failures, selling high, buying low, and staying away from the middle. So with that said, here's the plan for tomorrow. What if price goes up? What if price goes down? What if price goes sideways? First of all, price goes higher here, right? I'm looking for a one try, two try, and then a failure back down into that range. One try for the buyers already, two try here for the buyers, and then watching them fail, I'm then looking for the sell back down into that range with a target going back down to retest, right, to retest that low. Now that's a little bit different though than if we go up and we tag that high. If we can get up to the high of that channel, now I have to respect the channel, the measured move. I got to respect the buyers at that point. And that could happen in the overnight session. There's not a lot going on in the overnight. So if we do get some rallies going higher, there may not be much to stand in those bulls' way. If we do finish off the move going higher, however we get there, right, then my plan now will shift now, and now I've got to take those buyers seriously. First of all, I'm going to watch that channel and look and see if we can get that pullback somewhere tomorrow morning. Obviously, that will be, right, that will take some time to get to that point tomorrow, but that will definitely be on our radar. What will probably be more likely, though, is to see some sort of spike and range pattern. We got a couple of those happening in the E-minis. We'll grab those in a moment. But as it goes higher, watch for this market to start going sideways up here, you know, kind of stingy at those highs, and then look for that, right? Look for that little trap low, one try, two try, failure going back up there, right? So whether it be buying the trap below a spike and range pattern, or right, buying off the low of that channel. Right, those are two scenarios we are definitely watching for tomorrow if the price keeps going higher. What if price goes lower? Price goes lower, we really do have a pretty easy job here. We get a rising support trend line there. So of course that will be a key level of resistance. It won't be as desirable as buying off the low of this, right, of this range, but it will definitely give us an opportunity here to catch traders on the wrong side of the moving average. Now let's just say we slip below the moving average. Bears try to take this, they get held up on this, right? This will be, again, it's a little bit more aggressive than buying the low of that trading range, but heck, it's not that bad at all, right? Because we're able to buy at an area of support. At the same time, try to leverage the fact that sellers are probably getting caught and they'll have to exit for a loss. At the same time, as I mentioned earlier, this trading range, right, whether you want to call it that or call it this, I've got a little bit wider here right now, but we'd rather get this back down, one try, two try, and then back up, right, to buy off of those lows. So that would also be something we're looking for tomorrow if this price goes lower. Now, if it goes lower, obviously there's a bunch of different ways in which we could look for this. Comes down, right? What we call a two-legged pullback. That two-legged pullback will typically bring that moving average over. One try, failure, right? There's a few different ways in which you can start buying that, right? Two-legged pullback, failure pattern. Heck, it might even give us a pullback pattern if we have enough room, right, going back up into that range for tomorrow. So buying off the low of that trading range. What if price goes sideways here, right? What if price goes sideways here? If we stick, right? If we stick up at these highs here and we start spending a considerable amount of time going sideways, no major news tomorrow morning, we then have to give those buyers a little bit more respect, and we'll probably get one of those little trap lows, right? And then break higher here. That'll be a little bit of a nibble we can take tomorrow morning if we start seeing the buyers start to dig their heels in right up around these highs. Because again, we know where they're hunting for. They're hunting for that measured move. They're hunting for that 62.21. What else here? What else here? How do we turn bearish, right? Or how do we break out of a trading range? What does a breakout look like? A breakout always, to me, is one part moving average, one part two-legged pullback. That would be the breakout I'm looking for tomorrow, right? That will probably kind of coincide with that strong move up, finish off the move to the right to the measured move. Then we'd have right a lot more respect for those buyers, and we can look for that two-legged pullback, right, going from there. But again, a breakout always has to start with some real strength. Then I want to see that moving average up. And then I look for a very specific pattern. It's called a two-legged pullback. 1, 2. I call this the fake out, breakout, pullback pattern. Fake out, breakout, pullback pattern, right? Fake out, breakout, pullback pattern. I've done numerous lessons on the fake out, breakout, pullback pattern. We teach this stuff, obviously, in our intermediate and advanced classes here at School of Trade. So that would be on both sides, right? That'd be on both sides. Does not need to be just the bulls, right? It could be strong move down, right, strong move down, moving average comes out, right, breakout, pullback pattern from there. Now the breakout, pullback pattern, again, you want to see extreme strength leaving that trading range, right, because if you don't see some good strength, it'll go one try, two try, right, it won't clear out, and we'll be selling the sucker right back down into that trading range. Don't forget, you can learn more about trading ranges and the best way to trade those trading ranges inside of our intermediate classes here at SOT. Let's keep rolling here. From crude oil over now to the E-minis. E-minis just keep on rising here this week, or should I say this year so far. It's been pretty much nothing but a massive bull run in the year 2018. Over to the S&P. The S&P is bullish with a spike in range pattern. Notice the price going sideways now at those highs. Big clue here as the buyers finish their retest of today's high. This tells me the bulls have control, but they're already where they wanted to go, right? The buyers already achieved their mission. They went back and retested the high. So I don't want to keep buying this high until we see either some proof of price going through the high or I want to buy a pullback, right? Buy low, don't buy high. And guys, if you're wondering, what's the definition of buying high? It's a relative term, right? The term buying high, it all depends on market's context. Well, when we see a market drop off Friday's high, right? Drop off Friday's high and then gather itself and retest that high again, we are by definition now, right, relative to where we were at the beginning of today's session, we are extremely high on this chart. Does that mean that we can't keep going higher? Of course not, right? Look left. This market has no problem going higher. But once I see once, twice, 3 times, 4 times, this doesn't look like buyers are eagerly buying more at this area, does it? No, it looks like buyers are taking their profit. And so I take a step back and basically look for, do we see continuation, right? And then I can move from there, or do we wait for a pullback, right, and buy the pullback? I would much rather get the pullback. So a couple things here on the chart. First, most important, hands down, most important clue in the chart is the strong move down followed by the retest of the high, right? There should be a big old sign on here that says mission accomplished, right? The buyers got their mission, right? And now that we know, I even spelt that correctly, right? Even though we know the buyers had their mission accomplished, then we look for proof, right? Proof of what we call price rejection. In other words, we're not seeing buyers accept higher prices. Buyers are rejecting the idea, right, of buying at a higher price. That sets the tone. That's the story the market's telling us. The buyers were able to overcome a pullback. They retested the high, but they're rejecting the idea of going to a higher high. That tells me that unless we see proof of this going higher, right, I'm looking for a pullback to focus on buying low. Where would that pullback be? Good question. Get a strong move going higher, and then of course you'll see double tops, double bottoms, and that creates a short-term trading range. You'll notice that trading range pulled back just below the range, and buyers bought, right? Bought with a huge green candle. With all that strength going higher here, though, they weren't able to go much further than a few ticks through that high. What does that tell us? Again, buyers are here. They're definitely willing to buy the low. They're definitely willing to buy down at support, but they're just not eagerly waiting to buy to new highs right now. That trading range ends up telling me we'll continue looking for, right, that 2-try rule, right? Bears try once, pull back. Bears try twice. If we see them fail, right, we then look for that move going back up into that range tomorrow. Another big clue, draw this trend line up off this low. This creates what I'm calling a channel. You can see it's kind of an ugly little guy right here this afternoon. But you add the midline on. It looks like the midline here is starting to hold here as support and resistance. So we're definitely going to call that a channel. Now, at the very least, why don't we just agree, even if you don't like the look of that channel, which I don't blame you, it's a pretty ugly one. At the very least, we know we have rising support. Right, and this is one of the things I always, kind of talk about in our trade room each day. What do we know for sure? Right? I don't care about what might happen. What do we know for sure? Because whatever we know for sure, that will usually be the most reliable. Anything else is really mostly just speculation. We know for sure we have a trading range, and we know for sure we have a rising support trend line. It looks like a channel, right, but we know we have a rising support trend line. That creates, right, that means this area below 45, this area right here is a great spot for another short-term 1-try, 2-try trap low for some short-term buying opportunities in the overnight session. What I would love to get my hands on is a deeper pullback here, right? Deeper pullback, 1-try, 2-try, right? 2-legged pullback down into that battle zone. Lots of different ways in which we can do this. So really what it comes down to for tomorrow is do we go higher? In other words, do we see proof, right? Do we see proof these buyers are accepting higher prices, or do we see continued rejection? That really is the case. Let's play the game. What if price goes up? What if price goes down? What if price goes sideways? Well, if price goes higher here, that's fine by me. I'm going to wait patiently, not going to buy high. I'm going to look for that pullback here now to the low of that channel. I'm looking for buying opportunities now off the low of that channel, right, tomorrow morning. If price goes higher, I'm just going to keep using the support level, right? Hopefully what we can do is make this support, right? Get the moving average into position and then up, right? And bring us back. I mean, wouldn't that just be, right? That would be an ideal situation for tomorrow. Use the 47 3/4, use that rising support trend line, use the moving average, right? And use that channel rotation for a buying opportunity, right, tomorrow morning. So if price goes higher, I'm not going to chase after it. I'm still a bull, obviously. And like a smart bull, I'm going to wait to buy at support rather than buying at resistance in a bull market. What if price goes lower, right? What if price goes lower? Again, if price goes lower here, we'd like to see this price come down, give us that two-legged pullback into a failure, into a strength, right? Into a move going back to the high. If price goes lower, what I'm ultimately looking for is a two-legged move down to an area of support so I can then look for sellers to fail, buyers coming in, and back up to retest the high. Anytime we have a two-legged pullback, the objective is to retest that high, right? So that's the plan if price goes lower tomorrow. What if price goes sideways? Price goes sideways here. We already talked about this briefly, right? Price is already going sideways. Anytime I have a trading range, I always think focus on failures, right? Buy low, sell high, use the two-try rule. It's a bull market right now. It's a bull market right now. So that bull market, right? That bull market tells me I'm not going to try selling the high, right? Like I mentioned earlier on oil, right? We're going to try to buy that low, one try, two try. Let those sellers, I really don't care how far it pulls back. I'd like to go below that 40, that 45 even area, but in all reality, it's really not required. I just want to see those bears try twice and make sure I'm not buying up into that range. So we know the plan if price goes up. We know the plan if price goes down, right? We know the plan if price goes sideways. It's a bull market. How do we turn bearish, guys? Three things, right? Strength, pullback, and then strength, right? So strength, pullback, and strength. I can tell you right now, the most important thing for the sellers will be to start off by holding below that trend line, right? If they can hold below that support trend line, that's going to be a big punch in the gut, so to speak, for any buyers in the market. The minute I see them hold that pullback below that trend line, that's the minute I start thinking, okay, let's be a little bit more cautious on the buy side because this sucker may be reversing. At that point, once I start seeing that lower low, if we start seeing that thing strong right to the downside, what will that tell you? Buyers are getting out, sellers are taking control, leave that level of resistance on, wait for that channel to come up, right? And we'll look to sell, right? Going back down to retest that low at 36.5 here for tomorrow. Doesn't look likely the way these markets have been going, but you know, who knows, right? Who knows these days as far as when a market will reverse with all of this twittering, right, and 24-hour news cycle. We could easily come in tomorrow morning into a bear market. We just need to see proof. From the S&P over to the Nasdaq, another market that seems to be just on a string right now, keep being pulled higher here. The NQ is bullish with a channel and trying to finish its third leg higher this evening, which tells me we're running out of space for a decent target, which will most likely result in fewer buyers at this area, and fewer buyers tells us to expect a pullback. This short-term trading range is also a big clue. It tells me to avoid buying the breakout to new highs and focus on buying with traps and seller failures down below the lows tomorrow morning. This chart is somewhat different than the S&P, but very, very similar. You'll notice just in the S&P, the day started off with a little bit of a sharp pullback. Well, certainly enough, right? That didn't take very long. The buyers were able to regroup, retest, and does this look like buyers are rejecting? Definitely not. We blow through the highs, price acceptance through those highs, and we're still holding up above those highs now. Double tops, double bottoms, trading inside of a range. So that's what's happened so far, and you can see this market looks a whole lot stronger than the S&P. It's been a whole lot stronger than the S&P since the beginning of this year. At the same time, we also have, again, like I mentioned, that trading range, right? So that's an important factor here on the chart. We also have kind of up one leg, two leg, and three leg. So a measured move level of resistance overhead at 94.25. Combine that with this trading range, and we really got to be careful being a buyer up to new highs. And then last but not least here, we have our rising support trend line. Combine that up to the highs. Beautiful rotation back and forth. This is a channel that we definitely want to respect. In fact, I think that channel, combined with the fact that we have this triple measured move just a few ticks above us right now, is possibly the most important clue. For example, anytime I see a really well-behaved rotating channel, right? Notice how the market is just rotating back and forth inside that channel. Anytime I see a real well-behaved channel, I always know the best, most profitable opportunity is going to be on a pullback below a prior swing, and then look for a target going back up to retest that high. So anytime you see a beautiful channel like this, where you draw it up and you can easily see these rotations back and forth, you know everybody's watching it. When everyone's watching it, right, we know that there won't be a lot more buyers left to keep buying up here because, hey, they're already in long at this point, we assume, and the only way to attract more buyers at that point is to get a lower price going back up. Like I said, combine that with some overhead resistance, and all of a sudden, right, the potential for a deep pullback here starts to improve, and I get excited about that potential for the pullback, and then again, that retest of that high here for tomorrow. So, what if price goes up? What if price goes down? What if price goes sideways? Well, let's take a look here. We're bullish right now. What if price goes higher here? Price goes higher, look for channel rotation, and then I'm looking for that buy going back up again, using that measured move as support, right? Getting that moving average up above it and using it, right, as support going higher here for tomorrow. You can see I'm not trying to buy the breakout, right? I don't want to buy the breakout because usually what happens when you buy a breakout is you get a bad fill because there isn't very good liquidity. You're usually dealing with a fake out breakout. They're not very reliable patterns. And typically what happens, if I can buy, right, if I try to buy that breakout, right, that breakout is probably anywhere from a 30 to 40% winning ratio, right? Most breakouts can give you a significant pullback or fail altogether. What I'd rather do is wait for that buy back here. That's going to be a 70 to 80% winning ratio when I get that moving average combined and I get that little two-legged pullback, that fake out, right? What was it again? That fake out, breakout, pullback pattern, right, that I talked about earlier here on the oil market, right? So that's the plan for price going higher. I'd much rather skip the breakout and just stay a little bit more patient and wait for that deeper pullback pattern, right? I'll gladly trade some profit to increase my probabilities here. Now, with that said, what if price goes sideways? We have the double tops, we have double bottoms, right? What do we always talk about when it comes to a trading range? Yeah, you got it. Two try rule. Right? Two try rule. So again, if it goes sideways here, I want to go down, one try, two try, and then back up. Don't forget, you'll learn this in the intermediate course, but whenever the second try is greater than the first try, that's the big, right? That's the big opportunity, because what it's doing is it's roping in the counter trend sellers. It's also stopping out any buyers who are getting in too early and making them chase. Combine the buyers chasing after it with the short covering rally, right, of those sellers getting stopped out, and you have a rocket ship going back up to retest that high. Keep in mind, right, it's a bull market, so if we do go up one try, two try, that will be a lot less reliable using the two try rule to fade the breakout against the trend. What if price goes lower? Same thing, right? Same thing. Price goes lower. I'm going to be looking for what I always do. right? It'll first start with a two-legged pullback, that two-legged pullback into hopefully a failure, that failure into strength, strength into a pullback, and then pullback going back up, right, to retest that high. Two-legged pullback, failure, strength into pullback, and then we'll start watching for trap patterns, right, as we get closer back to that high, right, because you don't want to buy a high, you want to buy a low, which we're looking for those bear traps, right, as we go higher, right? A bear trap would look something like we saw here, right, earlier on this afternoon, right? Buyers go to new higher highs. They don't want to buy that high. What do? They try to buy low by looking for traps, right? That's what I meant when I said, right, once we go back to those highs, we'll start looking for trap patterns to keep buying tomorrow. All right, last but not least, we know if price goes up, we know if price goes down, we know if price goes sideways. How would it reverse for tomorrow? What would a reversal look like here for tomorrow? Strength, pullback, right? Strong move down, pull back to the moving average, strength going lower, right? Remember, if they fail, right, if these sellers fail to hold on strength, it's going to go right back up to retest the high, right? It's a buying opportunity, not a selling opportunity. So the bears have to hold that move lower. And again, once we see strength, pullback, and then strength going through, once we see that continuation going lower, now we know the buyers are giving up. Now we know we can safely start looking for selling opportunities, and I always look for that hidden channel, two-legged pullback, right, and off we go back down to the low of that range for tomorrow. Nasdaq, pretty good looking chart, very similar to the S&P, but again, some definite critical differences here, which hopefully I did a good job kind of going through with you guys here this evening. You can always leave comments below the video for any feedback. How about some gold? The yellow metal is range bound and trading sideways, the triangle pattern. This tells me to focus on failures up above the highs and down below the lows until we see a successful breakout pullback pattern tomorrow morning. The biggest challenge with a trading range is staying patient, in my opinion. I want to buy the low, I want to sell the high, I want to focus on failures, and I want to avoid the middle. Right? A lot of the time today we spent on gold was inside the middle of this trading range, right? So the biggest challenge with ranges is staying patient. You know, staying patient. Oftentimes, right? Oftentimes we spend a considerable amount of time inside the middle of these trading ranges, and when that happens, we want to use duct tape, handcuffs, shock collar, whatever it takes to keep ourselves right from pressing those buttons. As you can see here, just a real lackluster range. I'll tell you, this market was on fire at the end of last year, but so far in 2018, you can definitely tell whether it be tax reform or right or cryptocurrencies, whatever you want to blame it on. But this gold market, it feels like it's been left a little bit out in the cold here right now. That will change. That will not last forever, right? Once we think this is going to happen forever, right, it'll change on us, and this gold will come right back to its normal perky self again. We have a trading range. Specifically, we have a triangle. Anytime we see a triangle on the chart, I want you to think, where are the pivots, right? Where are the pivots? Where are the edges of that triangle? Because my goal is going to be to get up above the edge. It's a range, right? So one try, two try, failure back in, right? As we go up, it'll be the letter M, right? An M pattern, right? The letter M going back in. As we go down, it'll be the letter W, right? The letter W going back in. Again, stay away from the middle, right? Stay away from the middle, up. One try, two try, back down in, down, one try, two try, back up in. And then the good news is, right, the good news is that we're kind of staring down kind of the finishing touches of this triangle. And once this starts getting really narrow here, then we are susceptible to a big break, either higher or lower, right? We'll have to wait and see how that moves, right, for tomorrow. So in the meantime, though, your goal right now, your job for tomorrow is stay away from the middle, focus on selling high, buying low, use the two-try rule, right? Buyers try twice, sell off the high, sellers try twice, buy off the low, and focus on failures, right? And one last tip, watch the moving average. The moving average is usually going to be your best clue to find those failures tomorrow. Best way to do it, though, is come join me tomorrow morning. Tomorrow morning, 8 o'clock Eastern Time, we'll be opening up just before the opening bell at 8:20 a.m. on gold. Wrapping things up here tonight from the yellow metal over to the euro, right? The biggest currency in the dollar index basket. Euro is bearish with a big spike in channel pattern just ahead of this 20,000 round number and measured move target waiting below. The spike in channel tells me to look for selling opportunities after a two-legged pullback up into resistance, while the round number and the measured move are major support levels, and I need to avoid selling into them if price keeps going lower. Couple components here. This euro has picked up the slack on that gold, right? What a mover this euro has been so far. Strong move down. Anytime we see a real strong move in one direction, we know the odds of a successful trade coming off of that moving average are definitely in our favor. They take it and they run the price even lower. Take those two new lows, copy it up to that high, right? You can see sellers immediately now come in for a hidden channel selling off that high. That was a great gift to us, right, later in the morning here in the U.S. session if you missed the overnight, right, 3:30, 4 o'clock Eastern time on that euro. So now we have a spike in channel. Spike down, channel out, channel out. Spike in channels are big clues. They tell me direction, which is pretty easy. They tell me location, which is I want to look for, right, traps up at prior swings. Now, why am I looking for traps up here? Well, because basically a spike in channel gives everyone so many repeated opportunities to get in short that by the time we find ourselves in this position, we have to assume that everyone who wanted to get in short is already in short. You know, for example, if you weren't up early enough to grab the big collapse off the high, right? That was the first move down. That says get in short, right? Then what happens? We pull back to the moving average, right? We know that pull back to the moving average after the strong move down is highly likely to be sold and finish that retest of that low. That's a chance now, right, to get short. Then we pop back up above the moving average. If you didn't sell here, you're certainly selling here, right? I sound like a broken record at this point, but everyone sold, right? Everyone we assume with a pulse out there is already either in short or now taking some profit here. So at this point, the kind of the moral of the story is we don't want to chase the bus. We don't want to chase this market going lower. If you missed a chance to sell it short earlier, you missed it. Not the end of the world. Let's wait for a better, more reliable area to sell it. And that's where I come in to look at those traps, right? Above the 23, I love that naked reversal line, especially the fact they missed it by a few ticks. So that kind of creates my battle zone here for tomorrow. So what's the plan here for tomorrow, right? I want to go, if price goes up, price goes down, right? Or price goes sideways here. We'd love to see the market go higher here, and I'd love to get something at least above the top of that previous swing, right? Two-legged pullback would be great. Failure would be great. Strength in the pullback, back down, right, to retest, back down to retest that low, right? Moving average will come over, right? Sell on the way back down to retest that low. And then, of course, we'll try to pick up some scraps with traps on the way back down, right, to retest it. What if price goes sideways here? I wouldn't be surprised if price goes sideways. It just kind of has that look about it, right, that it may start going sideways here tomorrow. If that's the case, we have a bear bias going into that sideways range, which means looking for a 1 try, 2 try, focus on failures, right, and grab that failure up off the high of that range. Where's the target? The target is back down to retest that low. What if price goes lower? If price goes lower, we get that big, juicy 20,000 round number. That will be a key level of support. And we have that measured move, right? That's a level of support. So I don't want to call this a no trade zone, but if we keep going lower before we get that pullback, not a lot changes. I'm still going to be watching for, right, that move up, trap high, failure, and back down, right? So if price goes lower, I'm not going to stop. I'm not going to change my plan and just start selling short, right? Again, in a bear market, sell at resistance. Don't sell at support. These are some of the simple rules that I'm going to hopefully get a chance, right, to hold you accountable with every day in my trade room. In my experience and the feedback that I get from all of my clients is that everyone needs a little bit of accountability partner here and there, right, in our trading careers, and that's one of the big reasons why our trade room is so popular, right? I'm not going to let you make that mistake. I'll make sure you're disciplined and patient for the best patterns. Last but not least, how do we turn bullish? We definitely could. We end up tomorrow morning, overnight session, round number, and then blammo, right? We could jump no matter what happens, whether we go lower first or go higher, right? We got to see strength, pullback. Remember, if that pullback fails, we go back down to retest that low, right? Because sellers are going to be trying to sell high. So keep an eye out for that tomorrow. But if we see that strength, again, the first component to reversal is it's got to show me some strength. Right? It's got to be strong, right? Look at how strong it was going lower. You want to see something similar to that going higher, right? We got to see some strength going higher. Strength going higher, then pullback. Now the pullback, again, this isn't a reliable buy here yet, right? You've got to get some strength going through that high, and then once we see those buyers can actually hold to that new high, what typically happens is short covering rally. In other words, sellers who are in positions, they realize they're on the wrong side of the market, they get out of their short positions, which throws gasoline on the fire going higher. Then what I'll do is I'll mark up our new channel, right? We'll find that new support, and we'll look for buying opportunities from there. Target from there is to go all the way back up, right, up around that 21,000 big round number, right, tomorrow morning. Guys, got a good plan here for this, right? We know if price goes up, we know if price goes down, we know if price goes sideways, we even know what a reversal will look tomorrow. The hardest part tomorrow will be if it keeps bleeding lower here, staying away from the temptation or avoiding the temptation, right, to sell this sucker right into those lows. Wrapping things up tonight on our nightly newsletter. Hope you guys enjoyed the newsletter, by the way. Hope you're enjoying the psychology videos on our YouTube channel as well. Don't forget, if you're on YouTube right now, make sure you subscribe if you haven't done so already. Click that little bell icon to make sure you get notified every time I post a new video. And if you really want to make me happy, post some comments below that video. Let me know what I can do to make this newsletter even better for you. Drop me some comments. Right, we'll get the discussion going in the comment section below the video. While you're here, don't forget, if you want a professional grade trading education, check out our beginner, intermediate, and advanced classes here at School of Trade. You want to know what it's all about? Join the free trial. Our free trial is one of the very best in the business. I'll shoot you a free pass. Come out and join my trade room, right, with all of our guests. I'll also, right, give you a rundown of all of our patterns, all of our analysis. That way you can see what all the commotion's about. Any questions, don't forget, you can always post comments below the video, or you can always reach me using live support on the right-hand side of our website. Guys and gals, that'll do it here for me today. Like I said, tomorrow, right, no major news until about 10 o'clock Eastern time, so stay patient if needed tomorrow morning. I'll see you guys tomorrow, 8 o'clock Eastern time. If I don't, let's do it again tomorrow night, shall we? Same time, same place. As I always remind you, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.